Welcome to Finance This, Property That. My name's Dion Fernandez, and this podcast is for property enthusiasts, time-poor professionals, self-employed borrowers, and strategic investors looking for residential or commercial property who want more than just a low interest rate. They want a strategy and a team around them. Each week, I'll share strategies, structures, and lending moves that actually grow wealth, not just get you the loan. And also, I will help you surround yourself with information from professionals in their field. If you're here to build smart, not slow, you're in the right place. My vision is to empower financial legacies for generations. I am a mortgage planner and finance strategist, and I work with doctors, developers, business owners, and high-income earners to build serious property portfolios. So without further ado, let's get into today's episode. Hey everybody, welcome to this episode of Finance This, Property That. We have Jono from the Buyer Squad.
That is me.
Who appeared on episode number 2.
One of the OGs.
Yeah. Episode number 2 of the podcast, but the very first guest with Umbrella Creative in the new studio. It's been a long time between drinks, mate.
It has.
Thanks for gracing us with your presence. I know you've been very busy.
Yes, indeed.
How's life? It's been pretty much almost a year and a half since we did the first episode.
Would have been.
And that was when I'd first gone out and you sort of just started hitting your straps.
Yeah.
How you been since then? What's been happening?
Busy. So it's, I suppose the last year or so has been just growth more than anything. So it's been fun and games, growing the business, growing the family. I don't know. Well, it would have been just after Milo would have been born, probably after we...
just born.
Yeah, he was, would have been probably
6
like 6 months. Yeah. He just turned 2 yesterday. So happy birthday, Milo.
Holy. Bloody hell.
So it's been busy. Yeah, we've just the business has gone from strength to strength, which is great. There's been obviously higher demand for buyers agents in market, especially in the Brisbane market, as you would have seen as well. But yeah, we've just been building partnerships, working with clients. Obviously working with clients coming back for second properties now as well, which is cool. And just growing, really.
That's always a good testament to say that you did the right thing the first time.
Well, yeah, that's the ideal. Hopefully. Obviously.
Other than they tell their friends and family. But and also now you're doing a little bit more social media stuff, but a bit more brand awareness, The hat.
Get the hat on.
The hat.
Yeah.
At least it's not red with
new logos.
Trump.
Yeah, there's
logos.
no Trump involved.
Yeah.
It's orange. There's a difference.
I even matched
You did the microphones for it. I appreciate it.
No worries. Orange is a powerful colour.
Yeah, it is. We changed it around because we were, just trying to highlight a bit of that. And like I said, do a bit more social media. I've been busy, so it's been hard to get in to do more of that content like I know you've been focused on. But we've hired Liv in the team as well as an associate.
Is that the one that sat beside the pool on the
That is the one that was beside the pool. So
she's a professional pool sitter.
Yeah, and she's awesome with the content side as well. So she's pushing me to do more of it, which is good. So just
you need that balance sometimes in a team as well. I know that I've got that with Craig, where he's more of that analytical side, and I'm more of the let's go talk to as many people side. Yeah. And he helps with that. So yes, she's your content.
Yes.
Content queen.
Well, hopefully, we'll get a bit more of that going, and probably a few more of the serious ones as well. We need to make sure we're balancing that. But there's some fun content on this as well, more to come. Yeah,
and obviously being on a podcast helps too.
It does.
Have you been on any other podcasts since mine?
I did an audio podcast with Michael Curry. He's a financial planner actually, and so his is good as well. But not one of the video ones. So it's mate, you're the OG. Always come back.
Audio is not the same as video.
It's not the same. Yeah.
It's just not the same.
Exactly right.
Yeah, no. You've got a face for video, Jono. That's it.
That's not what everyone tells me.
But mate, look, interesting that you said it's been busy, because it has been. Like the property market, lots of rate cuts happening. Property market is going off again, and 1st of October, some more changes coming for the first home buyers. Look, I reckon that's going to drive a few prices up. It's good and bad. It's a double-edged sword. But, focusing on the types of clients you see, I really want to touch base on, how you are finding investment opportunities in today's market.
Yeah.
Because 18 months ago or so, it was a very different market to what it is now. So what we want to talk about, three key questions that we want to go through. Around what are some of the indicators that you look for? How do you see the role of the buyer's agents working with like a finance strategist and broader specialist?
Yep.
And then we'll talk about a couple of examples. You probably would have a few, of working with the right team that's just changed the outcome for a client completely.
Yeah.
So, mate, let's get into it, man. There's lots happening out there. I think from what I've been hearing from other buyers agents, stock's quite low at the moment.
What do you mean you talk to other buyers agents?
Oh, yeah, I know.
Come on, mate.
They tell me. They're saying, even real estate agents, stock's quite low at the moment.
Yeah.
So when you're looking for that investment for your client, what are some of the key things you're looking for when you're sourcing properties right now when the supply's so low?
Yeah, it's a difficult market. It is very tight. Specifically talking about Brisbane and probably the wider southeast Queensland market. So it's very tight. Working with agents, even coming into spring where there's meant to be a bit more stock coming through, it's still pretty tight. So it's really about relationships at the end of the day to try and uncover the right properties. But I'll probably go back to what we always talk about, and it's about delivering the right strategy for the client. So depending on what they're trying to achieve, we need to sit down first, go through all of their requirements, what the long-term goals are and the short-term goals to make sure we're delivering on that. So it will always be brought back to that strategy specifically for that client. So again, in terms of indicators, obviously, if we're looking at long-term growth versus maybe yield, depending on their strategy, we've had development-based briefs coming through as well to really start to expand on those types of those clients. So it will obviously be different for every single client. I suppose one of the biggest factors really is, the closer you get into Brisbane, generally the better growth we're seeing. There is pockets out there that are still seeing a really strong growth in the wider market and the wider Brisbane region. But generally, if the closer you are to the city, that's probably the better outcome at the end of the day.
It's also really scarce.
Yeah, it's just scarce. That's the problem. So it's uncovering.
I want to live close to the city, but then it's scarce, and you're paying the price for scarcity too.
Yeah.
But once you're in, you pay the price. You can't. We see all this. Oh, I'm just going to wait till it dies down, or I'm going to wait till I save more money. Shit, man, that's costing you money.
Yeah.
Doing that, the opportunity costs, by the time you're ready, it's gone up 5-10%. And then you're back, you're not even any better.
Well, we had that conversation with the client last week. They said, do we just hit pause? We're not sure if it's the right time. We want to maybe save a bit more money. I say, well, if you're saving, the market's almost probably out, depending on how much you can save, but it might outpace you as well because, we're probably seeing 1% a month in growth across Brisbane, for example. So it's, it's a bit of a difficult situation, but obviously changes to the first home buying side of things. Anything under $1 million is becoming even more competitive, or will be in the next couple of months, you would expect. And we're seeing a bit of a shift, I think, in, again, talking specifically around Brisbane, but freehold houses have generally been the thing that has seen the best growth, but we're actually seeing a bit of a shift into units and townhouses in the inner city where they've been outperforming the freehold houses in some respects. So if you look at the figures in the last probably 12 to 18 months, they are actually potentially performing better than some of the freehold houses.
That'll also come down to affordability. The freehold houses are much more expensive than the townhouses, but the townhouses give you the location, not as big a size.
Yep.
But I feel the townhouses are a happy medium between a house and a unit. Townhouse, duh.
Yeah.
But I hate gardening, so it doesn't really have too much gardening. I'm in a townhouse. It's perfect.
Yeah. And we're seeing a lot of clients move towards that. We're talking more probably owner occupied with this, but the demand for that from an investor perspective as well, because that's where the demand's going, which is then pushing the pricing up on that. But that is the more affordable category. So that's where a lot of the investors are starting to move towards. A lot of the owner-occupied clients are also looking in that category because they're priced out of the freehold house side of things. And so, that's a bit of the shift in the Brisbane market. people worry about body corporate, and you've got to find the right type of unit and the right type of townhouse. I mean, don't want to give too many secrets away, but a lot of the time, just basic principles around buying into a smaller complex. You own more of the land. Generally, you'll find that the body corp fees are a little bit lower, but they're still paying probably like $4,000 to $5,000 in most cases across a year for body corp fees these days in any complex. But the units, 6 to 8 pack kind of units, they're the ones that are generally performing well and in higher demand as well, both for owner occupied and investment. So there is a bit of a tie in there, right? Because the owner clients are looking at the same sort of products now that we are looking at from an investment point of view too, where it just becomes even more competitive.
Yep. And back to the 1st of October being the caps being lifted from 700 to $1 million.
Yeah.
Mate, that's just going to push I don't know. I feel that it's going to push prices up, and the lack of stock. Yeah. Everyone's waiting till the 1st of October.
Yeah, there's definitely been conversations about waiting to that point. I don't think there's going to be, again, no one has a crystal ball, but I don't think there's going to be a huge spike necessarily straight away, but you'll see consistent, continued growth and demand because of that. That change.
The competition. Yeah. The competition's going to be harder. And I feel for the first home buyers that are trying to get into the market.
Yeah, it's difficult.
Yeah. It's
especially if you want to live where you want to live, right? Yeah. And we're probably seeing a bit more of a rise of the rent vesting strategy too.
Yep.
Because people want to live in a city and they're happy to invest elsewhere. And, we're looking at the likes of, and I know we've talked about this, but Toowoomba, for example. So because Toowoomba is a really good investment market and there's some great product there. You can spend $800,000 or $900,000 for almost pretty much a brand new house with better yields than what Brisbane's delivering. So, and similar growth when you look at the trends.
It's a good pocket. It's one of those emerging pockets as well.
Yeah.
They've got getting the infrastructure going up there as well.
Yep.
Got the airport. Is it international yet?
Yeah, they've been flying out of there. Yep. And they've been doing commercial, I think, out of there as well. You've got a new hospital going in.
Army base.
Yeah, and you've got some of the Olympic stuff up there as well. I think the equestrian's going to be up there. So it's got some really good factors around it. But yeah, you've got those pockets. You've got the likes of Ipswich. You've got down south towards the Logan areas, and then up north around Moray and Caboolture kind of areas are starting to go pretty crazy as well. You'd never think you'd spend $1 million up there, and you're doing that quite easily now.
Yeah, easy. And it's not for a lot. You don't get a lot either. But, I guess with all that competition, all that, all the prices going up, I feel that it's actually even more essential that to have the right team behind you.
Yeah.
If you are working with a buyer's agent, you got to make sure that your finance is done. I know that, I'll never refer clients to you until I know what the finance is. Yep. You'll get the strategy. We've sent a few over through as well, and you're getting the strategy that way. It's easier for you to do your job.
Yeah.
But the more I can't stress this enough. The more prepared you are, the better the offer.
Yeah. Yeah.
What are your thoughts?
Yeah, one of the main things that we talk to clients about is being finance ready. It's one of the points in the original or the strategy document that we do is make sure you're finance ready, you're ready to go. It's going to get you ahead of the game as well as making quick decisions on the right property. Obviously, it has to be the right property, but the quicker decision you make when it is the right one, the more chance you have of actually securing the property. But to your point around the strategy from a finance perspective and the way that actually ties into what we do, we work really well together, I think, because you actually provide that finance strategy for me. Most brokers actually don't necessarily give that kind of information.
$850 purchase. Nothing's submitted, but $850 is their max
You're
borrowing.
Good. Off you go. No. Yeah. So your breakdown actually ties directly into what we do within our strategy document as well. So we actually sit down and actually feed that in to the strategy document. So we have a cash flow scenario in there that looks at how that all works together. And so it ties in and works quite seamlessly because you've had the conversation from a finance perspective. That then ties into how that works in the property side of things, because obviously budget's one of the big factors of what we're buying and where we're buying. And then that ties into the wider strategy to go, all right, well, it's going to be this, and this location, this type of property. Obviously, the purchase price will be max here. Cash flow is going to be X, Y, and Z. And it all ties in really cohesively together. So it works quite well. And again, that coming together is probably one of the big steps to then purchasing quicker and not sitting there for the next 6 months trying to find
time
the right
kills
property.
deals.
Yeah.
Like you're sitting
100%.
around. If you're sitting around in this market and you're umming and ahhing, you're not ready.
Yeah.
Stop. Don't even bother to. Why are you wasting your money approaching a buyer's agent trying to get finance?
Yeah.
If you're not actually wanting to do something.
Yeah, 100%.
Like then you can't go and complain that you missed out on opportunities and I should have done this 5 years ago.
Yeah.
Great. You can't fix what's in the past.
Yep.
You can affect the future by doing what you can do right now in the present. And right now, take action.
Yeah. And I think one of the difficult things for clients is feeling easy about the right purchase because they're spending a lot of money, right? So one of the big things that both a broker and a buyer's agent does is making sure that the client is comfortable and fully informed about the decision that they're making. So we're never making decisions on behalf of the client. We're just giving them all of the information, running all of the due diligence, giving them as much info as possible without, we're never giving financial advice, but giving them the information they can then take to a financial planner, their accountant, and actually make sure it's the right fit for them and how it's going to work. Again, same thing. Are they going to get tax benefits off the back of it? Working all of those numbers in and making the right decision based on their circumstances.
Structuring so important.
Yeah.
Like, if you're wanting to purchase in a trust, you need to have that trust ready so you can go make the offer.
Yeah.
We're not making an offer and then going, oh, wait, we've got to wait 2 days before we can sign a contract.
Yeah.
They've got 3 other offers sitting there ready to go that are ready to sign.
Yeah.
It doesn't matter if you're the best. Like, you're not ready.
Yeah, exactly right. And I think, like I said, speed, and you said speed kills deals, and speed wins deals, really, because, I think if you wait, the longer you wait, or when you've found the right property, especially in the market now, you're getting into multiple offer situations, and that's never a fun situation, especially like we don't find it fun either as a buyer's agent because you don't have a whole lot of transparency in what's going on. And we can push as much as we possibly can, work with the agents to try and get the deal across the line. But at the end of the day, you don't have transparency in what other offers are really there. And so when you're in that situation, you can potentially get it. You can potentially not. We can obviously do our best, but if we can try and get ahead of the game, make quicker decisions, use our relationships with agents to, get in there, then, it gets our clients ahead.
Yeah, and I've gone through the process of just recently purchasing a property, things like that, just this very specific type of property. But yeah, man, like it was actually the first one we put an offer on and the agent's like, yeah, we got outbid by 10 grand. So we're like, oh, whatever.
Yeah.
Like, we actually signed contracts, etc. Went away. We had 2 other places that we put offers on and they're like, yeah. And they're like, no, we're taking it to market.
Yeah.
But it's very, it's almost as if we were used as a anchor to see what the market's doing. And then it came out, but we ended up actually getting the property.
Right.
The first one we put a bid on, which was actually the best one anyway.
Yep.
Because the finance fell over.
Yeah.
They weren't organised.
Yep. Happens all the time.
What are you doing?
It's one of the biggest things. And when we're talking to agents as well, we're never bringing them a client that isn't finance ready. So they know that that's not going to happen. Whereas, they go with another buyer and it potentially falls over.
And that's where the agent has the influence. You'll never hear that conversation, but you sort of can get a gauge of the feel of, oh, hey, look, it's between you and a couple of others. And then all of a sudden you've won it and it's the conversation they're probably having based on, hey, look, I don't really know these people.
Yeah.
But I know this one.
Yep.
Yes, it's a little bit higher, but here's it, do you want to go for the higher one, but they're unsure?
Yeah.
Like there's a lot of unsurety. Whereas here it's like they're ready to go.
Yeah.
And bang, it's done.
And other terms as well, because we're finding conditions come into play a lot we don't ever really tell our clients to put an unconditional offer in if there's no building pest that's been done or anything like that. We're generally making sure that we're protecting the client the whole way through. And a lot of the time I tell clients if someone's coming in with an unconditional offer, there's no building pest on there, it's a very dangerous game to play because you just don't know what's going to come up. So we usually advise clients to be very, very careful about that. Not to be probably going down that path, but and if it's if that's the case, it's probably not the right fit. Let's move on to the next one anyway. But better conditions can also get it across the line. Sometimes, with an offer that's under the price of the other one, right? Either short shorten the terms down to like say 7 days. And again, generally if you're finance pre-approved or you've at least been fully assessed, then 7 days is probably enough to get that through.
Yep.
And similarly, getting building requests done as quickly as possible, that sort of stuff to make sure that we're getting the client ahead and giving the seller confidence that it's going to go through as well.
Yeah, I think that's a big piece. There are probably a lot of examples of that out there at the moment. But what's happened recently? Like, what are some of your key wins that you've had working as a bigger team?
Yeah.
For some customer outcomes.
Well, if we're talking specifically in the investment space as well, it's bringing it back to the strategy and working. I won't name names, but one of the clients that we've worked on, obviously, setting that strategy on, and it was in that dual key space, a cash flow based focus for them, and we ended up having to crash one deal because it had issues, and we couldn't kind of work that through and come to a consensus with the seller. So, sometimes that happens. Sometimes we have to crash the deal to make sure we're protected.
Issue too as well. So,
yeah, correct. Yeah.
It wasn't just that piece. There was a valuation issue as well, which we couldn't overcome. And we
unfortunately is happening a lot with dual keys. Yeah. And my feeling is that valuers are not fully understanding how to value that kind of property properly, because they're basing some of those decisions not necessarily on the same type of property. But anyway, that's a whole nother story we could get into. Valuation has been a bit of an issue across the board there. But it was about, making sure that we're not going down the wrong path. It's great. Let's crash that deal. We'll find the next one, protecting the client through that. But then moving on to the next deal, again, issues with, and it's about maybe getting a couple of valuations done to make sure that does stack up. And then getting the deal across the line from that perspective. And again, it's finding the right deal, the right property that we've been looking at for that cash flow in the right location within the budget that's going to tick all those boxes, and we end up getting there.
And they were ready for their finance. Like there was no, we already knew what was happening. They were ready for it probably
months before that.
Yeah, so. they were actually quite prepared. But I've been speaking to them for a while. We at one point we're just like, nah, we're not doing anything because, okay, mate, you got to go fix stuff up. And then, I even held them back for 3 months because they changed jobs and things like that as well. So I'm like, no, let's just go slow. Let's pause. Yep. We'll get the outcome.
It was definitely a longer term play with those clients. And now. That's
we restructured the debt, pulled out equity to make it tax deductible.
Yeah.
Their outgoings, like their non-tax deductible debt, is very, very minimal.
Yeah.
Which is great because now they've just got it's all tax deductible.
Yeah, correct.
And now they can concentrate on doing other things.
And good cash flow.
Yeah.
Obviously those properties deliver that, right? So they haven't got huge out of pockets. But we're also seeing massive growth in that category because they're really high demand products, and it kind of has gone through a bit of a cycle where they weren't, and then over the last, say, 18 months, they've just seen massive spikes again in demand, both from like Queensland buyers as well as interstate buyers because of the cash flow. And we've seen probably, in most cases, we were probably in the 700s maybe 18 months to 2 years ago, and now we're well into the 9s, if not up to $1 million for most of the purchase price for those kind of properties. So
on the newer side.
On the newer side, we tend to buy 5 years or less in most cases with those properties.
Depreciation.
Depreciation. Again, coming back to tax benefits on that. So, that's the type of properties we look at in that space.
Yeah, and it's funny because you did buy in that emerging market in that Toowoomba region.
Yeah.
I think that was one of the. And it's pretty good. I think they got it at a pretty good price.
Yeah, it was a good price, and again, because we're in the Toowoomba region, it was probably a little bit cheaper in comparison to Brisbane, which meant that the yield was probably better, which is great because that's why we're buying
it was the same rent as what you get in Brisbane.
Yeah, and that's why
probably a little bit more.
Yeah, you're buying it based on yield. That's the strategy of yield, not necessarily growth, but they are still seeing good growth. So you're kind of getting best of both worlds. But again, Toowoomba, very limited though. The stock up there for that kind of product as well is very, very limited. So it's about cutting through, again, working with the agents, uncovering those deals, and again, it's your network. And what do they say? Your network is your net worth or whatever it is. But it's about tapping into that. So when you get the client brief, you can make the calls to those agents that work on those kind of products in those areas. And it's a much easier and seamless process.
Yep. And I think your social media presence, as soon as you bump that up, will probably help with those networking opportunities as well.
Yeah.
Just means better outcomes for your clients at the end of the day.
Exactly.
That's why I do this podcast.
Yeah.
It's
true.
It's about education, linking it up with the My Wider network, inadvertently promoting other people's businesses.
Well, yeah.
Well,
You'll have to come on, mate. And we'll do some other content. You can come sit by a pool if you want as well.
Oh, mate, that'd be amazing. I'm actually going to do that next week. We're off to Singapore.
Yeah, you're away.
So can't wait. Need a break. It's
Nice.
been pretty big year so far.
Yeah.
Lots of change. But mate, look, what else are you seeing? Is there any other little nuggets of gold? Like, what are some of your tips moving into this new phase of the cycle, I would say?
Yeah.
It's coming up to the prime selling and buying season.
Yeah.
What are your tips?
Look, the biggest ones I think are for buyers when they're going in to look at properties. One, get your finances ready. So know what you can spend up to. You can be pre-approved or approved for more than you want to spend. So you can get a little bit of wiggle room, because in most cases where we're seeing the pricing, it's kicking above slightly where it should be. Do your research. Know what properties are selling for. You need to look at recent sales in similar properties in the area, and if you spend a little bit of time in market yourself, then you'll get a sense of that as a buyer. You'll know where they're kind of sitting, and then generally don't skimp over, like, I know we say this because we're generally playing with other people's money, but don't skimp over like $5,000 because that is the thing that sometimes can just get the deal across the line. And $5,000 over a 30-year loans,
You'll make that money up.
Yeah, you'll make it.
The growth will make it up.
If the growth is happening at 1% a month, like it has been, then you'll make that back in like a month or two. So it's, just that is the thing we're saying. You sometimes lose out by $1,000 or $5,000.
I think the moral of the story is, if you have the time to do it, then do it. If you don't and you're serious about buying, just approach a buyer's agent.
Correct.
They'll do it for you. Not every buyer's agent does it the same way as you.
No.
Not every broker does it the same way
correct.
as me. That's why you need to figure out what you want.
Yeah, and you got to find the right fit for you too. Like, you got to trust who you're working with, that they're going to do the right job, and you got to find the right people in your network, whether it's a buyer's agent, broker, accountant, financial planner, whoever it is, that is doing the right thing by you. Like, focused on making sure they're doing the right thing by you, because not everybody is, especially in real estate. But you got to find the right people that are on your side, in your corner, not just trying to make a quick buck off you, that are actually advocating for you.
Well, classic example of that is I don't give that same strategy that I give to you or my trusted network to other buyer's agents. If clients want to use other buyer's agents that come to me and I don't know them, I don't give them the same information. I give them a level, but I don't say this is the maximum they can go up to. Yeah. Because I've seen it when I have given it, they've actually gone up to that max price when they didn't need to go up to that max price.
Correct.
And the client's like, well, I don't want to spend $1 million.
Yeah.
You just thought $1 million was the max. So you're just trying to get the most out of me.
And I think that also ties into the way we charge our fee, again, because it's different across buyer's agent space. And a lot of buyer's agents charge on a percentage fee, which we don't do. We do a flat fee, so the clients know what that is going to be. And it means that if they're told us their budget's between 800 and $1 million, for example, we're not trying to push them up to the $1 million mark because we're going to make more money off them. They've already signed the contract with the flat fee agreed on. So we're there just trying to find the right property for them. We're not going to be influenced by trying to push them up into that top category, especially if they're not comfortable at that price either. And not to say buyer's agents that charge a percentage do that, but there's some sort of conflict there if that's the case. So that's why we charge the way we do.
And I think that's a pretty fair way to do it. It's all transparent up front. But it also then makes it easy for me when I do their funding position.
Yeah, exactly. You know what it's going to be. Yeah,
like,
exactly.
Oh, percentage of this price, and then it's a lower price. They're going to go change it. It's like, this is our fee. It's like, easy, done. Yeah. Same as a couple of other buyer's agents that I work with are doing that too. It makes life a lot easier.
Yeah.
I still use a percentage just to be on the safer side. If I don't know who the buyer's agent is, or if they haven't engaged you yet. I already know. I just want to be sure. And I use a higher percentage just to be sure. because it adds in buffers.
Yeah. Yeah, again, and I think it's just about, again, just doing the right thing by everybody, like whoever you're working. But obviously the focus is doing the right thing by your client. But then whoever you're working with, like my feeling is in this industry, you got to be focused on doing the right thing by your partners, like your brokers, whoever else you're working with, but also by the real estate agents that you're working with, the seller themselves. Like it shouldn't just be an us versus them mentality. It's about getting the right deal that, you know, everyone's happy. But making sure we're doing the right thing, still getting the lowest possible price we can for the buyer, but it's
bang for buck.
Yeah. It's in today's market, it's a seller's market. You're not necessarily going to go and get massive discounts in today's environment. It's about not overpaying, paying, you know, the right price to get the deal across the line, because what seller's going to take something undervalued in this market unless there's a major issue with the property? Like
Right price, right terms.
Yeah.
We all win.
Yeah.
And at the end of the day, it's trying to get into the market, not trying to time the market, because you're going to lose.
Yeah,
you're going to lose. You're going to try and play that game, you're going to lose.
Yeah, 100%.
Mate, thanks for giving us a few insights into this this changing market.
No worries.
Love the merch.
I'll give you a hat.
Where can clients find you and your merch store?
Yeah, well, I can go to thebuyersquad.com.au, or they can shoot us a message on Instagram, or give me a call. My number's on the website as well. Happy to chat to anyone that wants to have a chat. Sit down, have at least a 15-minute initial chat, or even just run through the full presentation, and see if it's the right fit. Happy to help whoever.
Sweet. And if they do help you, you get a free hat.
Yeah, you get a hat and a shirt. We've done shirts
and a shirt.
So yeah, that's a good.
Is it a Tommy Hilfiger shirt?
No, the other one's
that's just your personal one. All right, cool.
Thanks for having me.
Yeah, no, that's appreciated. Look, guys, as always, the information on the show is very general in nature. Doesn't take into consideration your personal circumstances. If you want to talk more about property and how the property strategy, you know where to find Jono. Pretty easy to find. If you want to talk about finance, I'm pretty easy to find at Dion Finance Specialist on Instagram, LinkedIn, Dion Fernandez. I didn't even remember my name. This podcast has also got its own website, financethispropertythat.com.au. Really, really simple. Thanks for listening, and we'll see you all on the next episode.